Subscribe to our YouTube channel for in-depth interviews of India Inc. and press the bell icon so that you do not miss our updates.
Hello and welcome to Nirmal, ladies and gentlemen. I'm Nirmal Dadia. We have with us Kunal Shah, head of Commodities Research, joining in. Welcome to the show, Kunal. Clearly, if you go to see with what's happening on the dollar index, do you think a drop to levels of 90 is something that cannot be ruled out? That's number one. And secondly, we are seeing that some bit of firmness also which is coming in, which made dollar index regain those 91 levels and beyond. So how would you actually play this?
Yeah, so first of all, I think dollar index is really on the verge of breaking down. So 90 is a psychological level. Once it reaches 90, I think you are going to see a free fall.
Okay. And go on, Kunal.
Yeah, and I think other thing which one should really watch out for, the trigger for dollar index to either move up or move down will be tomorrow US CPI data.
Hmm.
So tomorrow evening US CPI data will be very big data for all the asset class.
Hmm.
So again, the inflation going down after so much liquidity printing is definitely something which can cause dollar to shoot up abruptly. So today I think maximum downside 90-40, 90-45, nothing below that. 90 should hold, 90 should not be breached immediately, and all the triggers for the dollar index will be there in tomorrow's US CPI data.
Right. And then with this, what's happening is the commodity prices overall, if you go to see a pretty mixed trend, is what we are seeing. Uh, Clearly, you have bullion, gold, which was trading slightly lower. Uh, Same thing with silver as well. We were seeing some bit of pressure that did come in on COMEX. How would you actually play out gold and silver from here on?
I'm still bullish, but this is just small profit taking. What we are seeing, we saw 5,000 rupees rally in silver and 2,000 rupees rally in gold. So this kind of correction is most welcome. Gold 49 500 550 I would buy. Silver 64,000 63,900 I will buy. I will sell silver around 64,900 5,000 65,000. Gold I will sell around 50,100. So 50,000 50,100. First psychological resistance would be 50,000 rupees. So both buy at dips is my strategy.
Right. So buy on dips accumulation is the strategy with regards to where bullion goes. Apart from that, if you see in terms of base metals, Kunal, overall, the plan that has given out by Joe, by Biden, do you think that is something which is going to prop up the base metal market as well? Because while an infrastructure package, spending package is debated and implemented, Biden's policies are also expected to spur the private sector to accelerate plans to cut carbon emissions. Taking this into consideration, are we expecting this kind of an up move to come in? Because clearly, uh, tin, nickel, zinc, they have been setting fresh 2020 highs already.
See, already all the base metal prices have run up a lot. So for the first time, I would like to flag a caution over here
Okay.
because you cannot remain complacent. Why I am flagging a caution today is the China's CPI and PPI data. So, the inflation in China is started to decline. So the expectation was zero point 0.5, and today morning it came at minus zero point 0.5. So after all the broader economic indicators like industrial production, manufacturing PMI, all the data showing strength in Chinese economy, the inflation continue to go down. On one hand, you are seeing the commodity prices going up, and in spite of that, the inflation going down. So the consumption in China continues to remain weak, and that's the main reason, and that's the worrying factor. So I'm flagging a caution over here in entire base metal complex. I still like nickel. It can go up to 1245, 1250.
Hmm.
But beyond that, I am of the view that be very cautious. If you are long, put a strict stop loss. So copper, put a stop loss of 591. For nickel, put a stop loss of 1220. For zinc, put a stop loss of 217. I think if this level breaches, you can go short. I don't want to go long, even if it is going to go up. Only nickel is the one commodity where I will still say that with 1220 stop loss, you can still go long, but rest, I am flagging a caution over here.
Mm, right. And overall, with regards to crude as well, what's the view that you're picking up right now? Because if you see in terms of crude prices, uh, there is bearish inventory report that's coming from the US API, which is showing an inventory buildup of almost 1.14 million barrels. And the fear of lockdown measures combined with the eased output cuts from OPEC. Taking all of this into consideration, do you think we will see some bit of a sideways movement for some days from here on till the official inventory data comes in?
Yeah, so yesterday oil went down because of the reason I explained. The OPEC plus production made a new high ever since the month of October, and that's the reason we saw some correction. But the fact is that the liquidity rush, which is there in the market, is causing all the commodity, including oil, to go up. So I will still feel that 34.30, 34.20 are the levels. Between that, one can go short in crude oil, put a stop loss of 34.60 and expect it to go down to 34.50, 33.50, 33.20.
Hmm. Right. So that's with regards to where crude is concerned. I think there's one question coming in, Kunal. What would be the stop loss for gold today?
I think don't buy now. It's looking weak on screen, and I think 49,550, 500. I will buy. I will keep a stop loss of 250 rupees, 49 250, 49 240, and I will wait and book my profits around 49,800 to 900.
Right. So that's the view coming in with regards to, in fact, the stop loss that you should be maintaining with regards to gold as well. Thank you, Kunal, for joining in. Thank you, participants, as well.